What's up, everyone? So I'm back at y'all again with another dividend stock. Now, what stock is that? Well, before we go into that, let's talk about my requirements. Some of my requirements is it has to pay a dividend. There's no point in adding to my dividend portfolio if it doesn't pay a dividend. Number two, it has to be good financially standing. It has to be in the positive, and it can't be in the negative. Number three is it has to have good growth opportunity and a track record of it. Now, I don't like doing speculations. I don't like doing anything like that. And I stick to the very basic. There's no point of doing option put or anything like that if you're trying to buy good companies that you want to add to your portfolio. Now, I'm not a day trader. I'm not a week trader. I've done them all, and none of it works out as good as being an intelligent investor. Now, comment down below on what strategy you like to use, but right now I'm doing a dividend portfolio, so I am sticking to this for the next few years, and you can watch it grow and see me go through all these companies and see if it'll work out. Now, I don't want to start another company. I want to take ownership of one, but before I do all that, I need to make sure they're good financial standing and follow all my guidelines. Now,
for passive income. Passive income looks like this. You take money that you can afford to go to zero and you put them in the two places that have historically created passive income. Public markets that you don't care if it goes up and down and you just wait to the end, or real estate. And you hope that your real estate area doesn't get crushed. Everything else almost doesn't exist.
Some people do not understand this. When you own a stock, you own a piece of that company. So you need to do your due diligence and understand what you're getting into. For me, I'm buying these stocks for the long term.
I rejiggered my mind and when I read the book, The Intelligent Investor. And from that point, I never bought another stock. I bought businesses that happened to be publicly traded.
And I want to make sure I buy them whenever they're profitable and they're going to keep the profitability. So let's get into this stock. So what stock am I talking about? It's SLB Global Technology. I don't know much about them. I know accelerating decarbonization and innovating across the entire energy landscape, leading science, engineering, digital experience. So they look like they're in all sector. And here's a video of what they do.
Future for our planet. One with more energy, but less carbon. It's the world's greatest balancing act. To get there, we must go further than ever before. Further in innovation.
So you understand more about them. So they look like they're in sustainability and they're in the cutting edge. So once you saw that video, you kind of understand what they are and what they do. Now, I could go more detail and figure out what the future is, but there's no point of that if I don't see their books first. This is the thing. I don't like reading into the companies until I see what their growth's been like in their financial statement and if they pay dividend. There's no point of going into the future of the company if I'm not going to buy them. I don't want to persuade myself to try to buy something that I have speculation. And this is the way I do it. Now, this might not be your way, but I like to stick into the basic because I want to own the company for long term. So let's look at this company. So year to date, it's down negative 6.52. 1 year is down negative 21.51. 3 years is up 2.22%. And 5 years is up 81.84%. Now, it looks like it was doing good for a while and it started decreasing for last year. And I need to figure out why. Before I do that, let's look at the dividend. I like using stock analysis to look at dividend. It breaks it down easier for me to read and understand. So the dividend yield is 3.18%. Annual dividend gives me $1.14. And they pay quarterly. That's pretty good. The payout ratio is 38.56% with a dividend growth of 6.67%, with a 3-year growth. So that's pretty good. It has a pretty good solid history of paying dividend. So let's look at the finance now. Like I said before, I like to use the finance in MSN because it gives you the breakdown what each one of these are. Now, some people like it, some people don't, but I do like it because if I don't remember what something is, I come over here and see what it is. So if you don't know what revenue is, come over here where it goes. It says investment measure growth by how fast the company revenue sales is growing year over year. So how the sales doing? So for me, what I am looking at is from 2017 to 2024. How did they do? Did they increase their sale or decrease? So until 2019, and they're growing pretty good, not crazy, but they're growing. But in 2020, they took a dip. We all know why. It was due to COVID. And 2021, they still was recovering. And then 2022, it looks like they recover. With 2023 and 2024, they're making more. So looking at this, they have a decent revenue growth, and it's been increasing for the last 4 years. So that's a very positive. So I think for the revenue growth, it's very positive. Now the gross margin is 20.68%. I don't like that gross margin as much as others because that's a very low gross margin. I like seeing a 30% gross margin or a little bit higher, just so it gives it more padding for any mistakes. Now, I could go into like the operating expense and operating income, but I'm not in the management, so I don't worry about that. What I worry about is the net profit. How well has the net profit been? So they've been at 12%, 12%, 12%, 8%, and previous years in 2020 and 2019, they were in a negative massively by 30 and negative 44. And that could be many reasons why. Now let's see what they're actually worth. See if their current assets and fixed asset is weighs the liability. So they're about 38 billion and with current asset and fixed asset. All right, so 38 billion, that's not bad. Now current liability is 12 billion and 11 billion. So they're about 33 billion and their fixed assets 30. So they're in a positive, which is good. So the last thing I like to do is look at their cash flow situation to see if they're spending more money from the cash reserve than anything else. So if I'm looking at 2017, 3.5 billion, it looks like they've been stable at 3.5, 3.5, 3.7. 2020, they had to take some of the money to help keep them afloat. And they grew it for 3.51 to 2.1 billion to 4.7 and 4.6 billion. So it looks like they're barely stabled out from the last few years. So it looks like it might be a good time to buy them. But let's see what else they have. They do grant a pretty good amount and only one person that does it. And this is in the energy sector. They are in Houston, which is pretty cool, with employment of 110,000. I do like to see who invested in them. Top shareholder is BlackRock, State Street. Okay, so those are pretty good companies that buys a lot of these bigger companies. State Street sold a bunch, and Wells Fargo Company sold a bunch. All right. Exiting. I don't know any of those companies. All right. Financially, they look okay. They look like they're just recovering. Now, let's look at what AI says about it. Now, I really like to use AI because then they tell me and they do all the research for me for this situation. Because I'm not going to be able to go in and look at every single thing. It just takes too much time. I heavily rely on AI. So let's look at the valuation is 6 out of 6. They think it's right at value, which is good. Earning is 1 out of 6. I agree with this. After I see how much their profit margin is, the earning is on a lower spectrum for an energy company. Future growth is pretty much a 0. Historical growth is 2 out of 6. I agree. And financial health there, 6 out of 6. I agree with the financial health. They're very financial healthy right now with their cash reserve, and they've proven they can deal with any storm. Now, the issue I have is the future growth. If I look at this and look at their track record, the 5 years is 81, the 1 year is 21. Doesn't mean that they're not a buy, but it does hurt the financial future. I might have to come back to this company to see what they do in 2025, but I don't have any hope for it, because if AI saying the future growth is 0, that means I don't even want to research it anymore. Now, the analysts do say it's a buy. Now, this is the thing. I don't always trust what the analyst says because I had to base it off my opinion. Now, they are doing below the industry standard for the price to sell versus the peer. So, yes, the valuation is pretty good. They're below industry standard. Now, earning per share is peer average is negative 4.19, and they are at negative 4. So they're not doing so good with earning per share. And their revenue, it dropped off. So Q1 24 and Q1 25, it's way lower. So yeah, I cannot buy this company if it's like this. So it just looks like it's took a very bad year. So based off that information of AI and what I see with it, it's not worth buying. Now let's go into why it doesn't meet my requirement for growth. So growth wise, it does not look like it's going to meet the historical value that it did the last 3 years is dropping, even though the finance shows that it is doing better. So the finance sales is growing, but the sale of the company is dropping. So I just can't buy this company just because of that. It does pay a dividend, pays a pretty good dividend. So yes, if I want to add it to my portfolio because it's dividend paying, yes, I think it's a good one. And number 3 is it good financially? Yes, it's good financially. So who should buy this stock? Pretty much if you want to buy this stock for the future, maybe 5 years, 6 years from now, they're going to do a lot better because you believe in the green initiative. It'll be great for you. But for me, it is not doing so hot. Q1 2025, it did worse than Q1 2024. So that right there showing me it's not going to be a good year. So they're not, in my eyes, going to have a good growth. So based off that information I saw and what AI said, they're not worth having. So like and subscribe to my video. I won't be adding this to my portfolio, but doesn't mean you don't.